This is Nightly Business Report with Sue Herrera and Bill Griffin.
What changed? The market peaked 3 months ago, and today things are a lot different than they were then. Big oil boom? Not so fast. Oil prices are rising, but Exxon and Chevron can't seem to capitalize. Price hike. Amazon's Prime membership is one of the engines that drives that company, and it's about to cost you more. Those stories and more tonight on Nightly Business Report for Friday, April 27th. Good evening, everyone, and welcome. I'm Sue Herrera. Bill Griffith is off tonight. Wall Street wobbled a bit. Stocks closed out one of the busiest weeks of earnings, kind of mixed. Not even those blowout tech results that we told you about last night were able to lift the market convincingly higher. It seems as if investors are still debating whether better than expected earnings will be enough to lift stocks in the face of rising interest rates. The Dow Jones Industrial Average fell 11 points to 24,311. The Nasdaq added 1 point, and the S&P 500 was up nearly 3. The major averages were slightly lower for the week. Despite declines this week, stocks are on track for monthly gains. Today marks 3 months since the market peaked. And as Mike Santoli reports, a lot has changed since then.
It has now been 3 months since the stock market hit its latest peak in a rush of New Year's enthusiasm over a humming economy and a big tax cut. Since then, the market has turned volatile and tentative, dropping a quick 10% in February and then struggling to cling to its long-term uptrend as the side effects of brisk economic growth and lower taxes gained more attention, namely higher interest rates, a buildup of inflation, and lofty equity valuations. The S&P 500 now sits about 7% beneath its late January high and roughly flat on the year. One way of looking at this setback is as simple payback for an overheated 2-month surge of momentum that started at Thanksgiving. In part, this payback is a response to higher borrowing costs. The 10-year Treasury yield pushed up against the 3% level, up nearly 0.5% from 3 months ago. So far, the market has managed to absorb this rise in rates, with the S&P 500 sitting a few percent above its February low, even as yields struck multi-year highs. The main result of the 3-month rollover in stocks has been to make them look a good deal less expensive and to cool off runaway investor optimism. Strong gains in corporate earnings and sluggish share prices have dropped the market's price-to-earnings multiple to around 16, based on the coming year's forecast profits. That's right in line with its 5-year average. Investor surveys and mutual fund flow trends show investors have turned a good deal more cautious as well. The good news in all this, so far it doesn't appear the stock market's hiccup has been indicating any serious risk to economic growth. First quarter GDP came in ahead of projections, and companies have boosted capital spending, which both argue against the idea that recession risk is rising. With investors newly sensitive to any signs of a rapid spurt in interest rates or the chance that corporate profits are peaking for this cycle, Wall Street might well stay in its choppy, tentative trading range for a while longer. The good news of corporate prosperity now comes with partial offsets in the form of higher rates and more inflation. So far, though, this anxious 3-month adjustment in stocks does not indicate that January's peak was the very top of this bull market. For Nightly Business Report, I'm Mike Santoli.
As oil prices rise, you would think that big oil's profit and revenue would too. But that wasn't necessarily the case for ExxonMobil and Chevron in the most recent quarter. Their results were mixed, and so was reaction on Wall Street. Jackie DeAngelis explains why.
Oil prices are up almost 40% in the last year, climbing closer and closer to $70 a barrel. The reason? Excess inventories are falling, while global growth looks strong. Still, some of the oil majors struggled with earnings. ExxonMobil told investors that its quarterly profit was higher year on year, but it still fell short of expectations. Higher oil prices did help the company, but the company's downstream business, which refines and sells fuels, saw a slump because of higher expenses abroad and lower profit margins on sales of assets. Chevron's profits were better than expected. However, its revenues, while higher than the previous year, did not beat the street. Regarding expectations for oil prices, the company said this on its conference call.
We're not designing our business on these kind of prices. We're driving our business for a lower for longer assumption. But I would expect prices to stay in a fairly tight range over time, and we're going to design our business to deal with the lower end of those assumptions.
Chevron's stock price has seen a rebound of about 10% in the last 3 months, in part because trouble in its refining business the previous quarter took its stock price down. Earlier this week, ConocoPhillips beat expectations on profit and revenue. Higher oil prices were part of the story, but so were cost cuts. Energy was touted as a bright spot for investors this year because of the oil price rebound, and it's definitely outperformed. The S&P energy sector is up a little more than 2% year to date, one of the 4 sectors showing a gain in that time period, and second best only to the technology sector. But experts say a full rebound in energy will continue to take time, as $70 oil is better than sub 40, but not as good as over 100. For Nightly Business Report, I'm Jackie DeAngelis.
Amazon is hiking the price of one of its most important services, its Prime membership. It appears that people are willing to pay up for what's become one of the driving forces behind Amazon's dominance. Deirdre Bosa has more.
Jennifer Greco has been an Amazon Prime member for 2 years. She uses the service about twice a week.
I use it for everything, like from books to health products to displays, everything. It has everything I need and I get it right away. That's the truth.
And she says the upcoming price hike for her Prime membership won't stop her from subscribing.
Honestly, considering that most of the time I don't even get charged for shipping, it's really not a bad deal.
Other reactions were a little more mixed.
Because I abuse it so much, it's not as big of a deal because I know I'm going to get my $20 worth out of it.
That's like $20 more than last year.
This is not the first time they've done this to me, but I'll eat it. I'll eat the cost because I'm so addicted to my Amazon Prime.
Annual Prime memberships will soon cost $119. That's a 20% increase from the current $99. It goes into effect May 11th for new subscribers and June 16th for current members renewing. The company says that as the Prime ecosystem has expanded, so too have Amazon's costs.
The value of Prime to customers has never been greater, and the cost is also high. It's as we pointed out, especially with shipping options and digital benefits, we continue to see rises in costs.
The last time Amazon raised the price of its Prime membership was back in 2014, when 20 million items were available for 2-day free shipping. Today, there are more than 100 million eligible products, as well as 2-hour free Whole Foods grocery delivery in 10 cities and a hugely expanded digital library of music and video content. Analysts like RBC's Mark Mahaney aren't worried that the hike will hurt the program's growth. He points out that the extra revenue will allow Amazon to invest even more back into the business.
And then you put in a $20 price increase on 100 million subscribers. That's $2 billion in incremental revenue cash flow that could drop down. Knowing Amazon, they won't allow it to drop down. They're going to invest it in something, but still, it's great profit potential.
But the stakes are high. Revenue from Prime memberships is part of one of the fastest growing business segments for Amazon, a unit that grew 60% year over year this past quarter. And more broadly, Prime itself is the flywheel in the Amazon machine. Research shows that members shop more often and spend more on the platform than non-members. And once you're in, Amazon can upsell you on Prime upgrades like fresh grocery delivery and Music Unlimited. For Nightly Business Report, I'm Deirdre Bosa, San Francisco.
So what exactly is your $119 membership used for? We're joined now by Tom Forte, who broke down those numbers for us to determine what Amazon does with your money. He's managing director and a senior research analyst at D.A. Davidson. Welcome. Nice to have you here, Tom.
Thanks for having me, Sue.
Do you agree with those who say, before we get into the breakdown, that people are going to be willing to pay up for this service, that Amazon has that strong a pricing power?
Absolutely. And what people are paying for, let's be clear, it's convenience, the ability to get an increasing number of products on a 2-day basis, sometimes faster, and selection, being able to get so many different products that quickly to your home. That's really what people are paying for. So I do think that they will not balk at an incremental $20 a year fee for Amazon Prime.
We had some people who did, but the vast majority of those that Deirdre interviewed agree with you. So you worked up kind of a pie chart for us to see where that money is allocated. So let's take a look at that. We have 2% goes to the headquarters, 34% goes to profits. That's a very large number. Tell me about that.
So generally speaking, if you look at Amazon's buckets of profitability, we usually think of cloud computing as their largest bucket of profits. But on a relative basis, if you look at the cost structure, so the notion of you just pointing out how much we estimate of that prime revenue goes toward shipping and handling, how much of it goes toward content costs, things of that nature, we're estimating that about 34% ends up as profits to Amazon. So this would make it one of the most profitable efforts by the company, which is why I think investors are so excited at the $20 price increase.
You know, I found it interesting that only 13% goes to content, because we hear from so many companies that one of their major costs and one of their major concerns is the cost associated with content. That seems like a low number to me.
It may be on the low side, but if you look at the content costs, they're almost at parity with shipping costs. So that is a pretty expensive cost for the company. And I would argue, and I suspect that when you polled consumers, not many of them today are saying, I'm a Prime member for streaming video on Amazon. So they just re-upped their deal with the NFL, 2 more years of Thursday night football. And they also have a new head of their Amazon studios who has a strong background in television. So to the extent that Amazon Prime can have more hits, more mainstream content, then maybe you'll see more consumers in the future saying, I'm a Prime member, not just for fast and free shipping on so many different items, but because I love the content.
On that note, Tom, thank you so much for joining us tonight. Have a great weekend. Tom Forte
You too, Sue. Thank you.
D.A. Davidson. Well, North and South Korea's historic talks help lift stock markets across Asia. But investors are looking at the summit with both optimism as well as caution. Eunice Yoon is in Seoul tonight.
South Korean officials say that President Moon Jae-in is going to have a phone conversation about the summit with President Trump. And he'll likely say that the dramatic events today on the Korean peninsula will likely set the stage nicely for a potential meeting between Kim Jong-un, the North Korean leader, and the president. And that's because this is potentially a major turning point in a conflict that has been technically going on for decades. After the summit, North Korea's Kim and South Korea's Moon held a joint press conference where they vowed to end the Korean War. They agreed to phase disarmament and the complete denuclearization of the Korean peninsula. Now, this is the formal side of what's been a fascinating day here. Probably the most talked about moment was when Kim Jong-un, perhaps the most secretive leader on the planet, walked over to a podium in front of the media and gave an address live on TV. He talked about how North and South Koreans are the same people and that he hoped for a new path forward. And it seems to be having a dramatic effect. South Koreans were saying that they were deeply moved and were wondering if this conflict could actually end during their lifetime. Now, that all sounds encouraging, but the Koreans have been down this road before. Since 2000, there were 2 other summits. Both ended in peace declarations, but nothing came out of those meetings. This declaration is meatier, but we still don't know what Kim Jong-un's true motivations are and just how seriously committed he is to dismantling his nuclear program. For Nightly Business Report, I'm Eunice Yoon in Seoul.
The Toronto and Montreal stock exchanges shut down early today due to a technical glitch. This afternoon, the exchange operator reported that its systems were down and no trades could be executed. Dual-listed Canadian stocks on the NYSE and the NASDAQ continued to trade normally during that outage. Normal trading in the Canadian exchanges is expected to resume on Monday. It is time to take a look at some of today's upgrades and downgrades. Microsoft's rating was raised to overweight from neutral over at JP Morgan. The analyst cites strong growth in its cloud business. The price target is $110. Microsoft shares rose more than 1% to $95.82. Facebook's rating was raised to buy from hold over at Stifel. The analyst says the stock is just too cheap to ignore. That's a quote. The price target is $202. The stock finished today down just a fraction to $173.59. Nike's shares were upgraded to buy from hold over at HSBC. The analyst cites a turn in the U.S. market for Nike and a lower tax rate. The price target is $77. Nike shares rose 2% to $69.56. Still ahead, why the newest Avengers movie is box office gold for Disney. It is shaping up to be a blockbuster weekend for Disney. The latest Marvel's Avengers movie is making its debut, and it's already off to a running start. Julia Borston takes a look at just how big this superhero film is expected to be.
Avengers: Infinity War is a Marvel extravaganza 10 years in the making. The well-reviewed film ties together the characters and storylines across the past 18 Marvel movies, with Iron Man and Captain America teaming up with the Guardians of the Galaxy, as well as record-breaking Black Panther, for what looks like it'll be the biggest superhero movie ever.
Wow. I think it just says a lot about what they've accomplished over 10 years, and it just goes to show you that, you know, they've taken this genre that a lot of people thought, you know, how long can you make these superhero movies? Well, they're 10 years in, and it's stronger than ever. And so I think it just bodes well for the future of the genre.
Infinity War ticket sales on Fandango have outpaced the last 7 Marvel movies combined, making it Fandango's #3 biggest pre-seller of all time. That bodes well for the film, which is said to be one of the most expensive ever, with a budget reported over $300 million. Thursday night previews set a record for Marvel, selling $39 million of tickets at the U.S. box office. That's the 4th biggest Thursday opening ever. While overseas, the film brought in $95 million in 2 days, and it hasn't yet opened in major markets China and Russia. This puts the film on track to gross more than $220 million in the U.S. and as much as $500 million worldwide this weekend. That would be a record for the spring, and by getting audiences excited about flocking to theaters, it sets the stage for a massive summer, not just for Marvel's parent Disney, but for all the studios.
I think the summer movie season is going to be better than last year's summer movie season. I think just in May alone, between Infinity War, Deadpool 2, and Solo, a Star Wars story, we could see one of the biggest Mays that we've ever seen on record at the box office.
And after the overall U.S. box office declined nearly 3% last year, studios and theater chains could use a boost. Avengers' roughly 85% critics rating on Rotten Tomatoes and its over 90% audience score bodes well for strong word of mouth for the team of superheroes. For Nightly Business Report, I'm Julia Borston in Los Angeles.
TV subscribers flee Charter Communications. That's where we begin tonight's market focus. The cable provider said it lost more than 120,000 video subscribers. That's almost triple the amount that analysts had expected. And it wasn't just weakness in TV. Fewer customers signed up for broadband services. But still, Charter reported a rise in profits and revenue thanks to higher ad sales. Charter shares fell 11% to $263.33. The drug maker Sanofi reported a greater than expected drop in earnings as weak sales in the U.S. and Europe hurt its results. The company still reaffirmed its guidance, and it announced a share buyback, adding that it expects to return to growth in the second half of this year. The shares nonetheless fell 2% to $39.60. The software maker DocuSign began trading on the NASDAQ today, opening at $38 a share. That was above its initial IPO pricing of $29. DocuSign sold nearly 22 million shares, valuing itself at about $4.5 billion. The shares finished higher than they started at $39.73. And Boeing is reportedly closing in on a deal to buy the aerospace parts maker KLX. The Wall Street Journal says the move is part of Boeing's plan to grow its aircraft services business. Boeing shares were off a fraction on the news to $340.88. Meanwhile, shares of KLX popped 9% to $80.05. Sprint and T-Mobile are reportedly near a merger deal, which could be announced as soon as Sunday. According to CNBC, the deal would be valued at $26 billion, but it would face major challenges from regulators. The report sent Sprint sharply lower in after-hours trading. Shares of T-Mobile rose initially in the after-hours session. Time for tonight's Market Monitor. He has some picks. He says we'll rise double digits over the next 12 months. Joining us is Craig Hodges, CEO of the Hodges Capital Management. Nice to see you again, Chris. Welcome back.
Thank you. Great being on, Sue.
And you are looking at what you say is a more business-friendly tax and regulatory environment, which is going to spur these businesses and their ability to expand, correct?
Yeah, it's a much better atmosphere than we've seen previous. And I've seen more optimism out of management teams, not just for the tax cuts, but the decrease in regulation. And you can tell that they feel like the next couple of years are going to be a pretty good climate. And then you add on this tariff situation, which, there's a lot of negotiations and it causes a lot of volatility. But that's going to be a good thing, too, for U.S. companies. So I think we're in a good spot.
Excellent. And I called you Chris. I know you're Craig. I've known you for years. So my apologies on that.
No problem at all.
Let's get to your first pick, if we could, and that is a commercial metals company, CMC. Why do you like it?
Yeah, it's a small company, but believe it or not, this small rebar company is going to be the #1 U.S. producer of rebar in the United States. It just made an acquisition, Gerdau, the Brazilian company, their U.S. rebar operations. And all of a sudden, here's commercial metals that's going to have 50% of the world, or the U.S. rebar market. And rebar goes in from roads and bridges. Almost all construction has rebar in it. So that's really going to be a big beneficiary of infrastructure and that sort of thing. And here's a company that's trading around 21, 22 that probably in the next couple of years will earn $3 a share. So that's a very inexpensive, kind of uncovered stock that we think there's some pretty big upside in.
All right. Next on the list is International Paper, a name that a lot of people know.
Yeah, and International Paper has really taken it on the chin the last few months. They're in somewhat negotiations to buy Smurfit, the European corrugated paper company, and it's knocked about 25% of the value out of International Paper. Meanwhile, International Paper's had 2 of the best quarters they've had in a long time. They've had nothing but better results. So I think the stock down 15 points from where it was, say 8 weeks ago. It's got some real upside, and you get 3.6% dividend while you wait. So I really like International Paper here as well.
You also like the airlines. You think they're under-owned, and your pick in that particular arena is American Airlines. Why American?
Yes. American has really come down, surprisingly come down. This stock was 59, I think, in the first part of January, and here it is. I think the stock's kind of in the 42 range now, trading about 8 times earnings. They have slightly taken down their earnings, about 50 cents for next year because of some higher fuel costs. But they're still going to earn probably close to $6 this year, and I think $7 next. So I think there's some pretty good upside. Plus, Buffett's been buying all the airlines. I think there's a Buffett bid in there, and I just believe that the airlines at this level have some very good upside with very limited downside.
Craig, thank you so much. Have a great weekend. Craig Hodges with Hodges Capital Management.
You as well.
To read more about those picks, head to our website, nbr.com. Coming up, how a woman combined yoga and her love of goats and turned it into a big business. Here's a look at what to watch for next week. On Tuesday, Dow Components, Apple, Merck, and Pfizer report their earnings. On Wednesday, the Fed policymakers meet to make a decision on interest rates. On Friday, the closely watched employment report for April is due out, and that's what to watch for next week. Well, you may have tried yoga before, but have you ever done it with goats? One woman combined the two, created a following, and now has a successful business. Jane Wells is in Corvallis, Oregon.
I'm trying to hold a plank position, but I have 2 baby goats on my back.
Do the goats ever jump in this? Because that would be weird.
It is weird, but also kind of a nice massage. Welcome to Oregon, the place where the strangest fitness trend was born.
Focus on your breath.
Goat yoga.
I'd never lived in a spot where I could have goats. I've wanted them my whole life.
Lainey Morse had a career in marketing. Then she got divorced, came down with an autoimmune disease, and was very depressed. But she'd bought some goats, and they made her feel better.
So I would go out in the field every day and spend time with my goats. And I started calling it Goat Happy Hour and inviting people over.
One of those people was a yoga instructor.
she's like, you should really let me have a goat or a yoga class out here. And I said, okay, but the goats are going to be all over the humans. And she was like, cool. When I launched my classes in March, I had over 2,300 people on a wait list to do goat yoga.
How are we doing so far?
The goats are surprisingly soft and friendly, and they don't smell, though they occasionally leave presents.
I got poop.
First-year revenues were $160,000, a figure Lainey Morris expects to double this year and turn her business profitable. She's done corporate events for companies like Nike, expanded to 3 locations in Oregon, and licensed the business in 4 other states.
You're just blown away by how happy it makes everybody. So that's when I knew I had a business.
Turns out combining downward dogs with upright ghosts wasn't such a bad idea. For Nightly Business Report, Jane Wells, Corvallis, Oregon.
Christie's is hosting what it calls the most anticipated art world event of the spring. As we've been reporting, the collection of Peggy and David Rockefeller will go up for auction next month. Today, the exhibit of 2,000 items opened in New York. It is expected to be the largest single auction ever, possibly reaching $1 billion. Before we go, here's another look at the day on Wall Street and the week. The Dow fell 11 points, the Nasdaq added 1 point, and the S&P 500 was up nearly 3. The major averages were all slightly lower for the week. And that does it for NBR tonight. I'm Sue Herrera. Thanks for joining us. Have a great weekend. We'll see you Monday.